Welcome to Markets Now. I'm Michelle Ruck along with Scott Varilek with Kooima Varilek. Grains back to the plus side this morning. Livestock futures are mostly lower. And let's talk about the grains first. We are seeing a rebound. How much of that is just either fund selling exhaustion versus maybe weather and the drought monitor showing an expansion of some of those dry areas in the eastern Corn Belt?
Yeah, thanks for having me. And it appears that it's the season to put your seatbelt on and ride the roller coaster. So I think a lot of the weather trade is what's probably affecting the market here. Is we're in a hot, dry window where we can see the drought monitor, yes, growing, and it's right in some of the heart of the Corn Belt here. So it's not so much that what's the weather doing in North Dakota, but what's it doing in Illinois and in Indiana and Iowa. So it's looking like could use some moisture and use it now. So there's going to be a continued heat here for the short term, but it's what's beyond it that the market was starting to pencil in some of the break. I think we were breaking as we talk. El Nino is planned to shift us to some cooler, wetter kind of weather here in a couple of weeks. So I thought maybe that was part of the break, but the hot and dry now, where is it raining? And you feel the heat. So I think we turn right back around quickly on that news as we see some of the drought monitors. And you can never trust, what those long-term weather outlooks are actually going to be. Because if all of a sudden they'd start to slide that back, those cooler, wetter type of weather, if they start to slide it back, maybe now it's July. Well, then we're going to probably put some more premium right back in. So it's very uncertain. Volatility is going to be what we're going to be used to for a while. So when we break, we talk about some of the other stories that we're looking at: the weak exports, the energy prices are low, the strong dollar, and then when we're back higher, we talk about the weather. So it almost feels like we have a story to talk about whatever direction it's going in. So that's just the uncertainty of it and why it's bouncing up and down as hard as it is.
Yeah, it does feel like, though, that we took too much weather premium out and need to put some back in. So that certainly is part of this discussion today. All right, the cattle market, let's go over there. The higher corn prices weighing on feeders a bit this morning, but we had new contract highs in both live and feeder cattle futures yesterday. Do you think we're due for a little bit of a correction, or are we going to see higher cash pull us back up again?
Yeah, as overbought as the feeders were, you get the corn to rally. That's a good time for a little bit of a correction, but cash feeders are maintaining it's hot, hot prices. Things are selling good. So that's a lot of fun for the cow-calf guy in an industry that's needed a good shot in the arm for sure in the beef producer sector. So finally seeing some profits for all of these guys that were much needed over the last few years that they've went through and several years. And so you get a little correction on the feeders here from contract highs. Still hearing that cash is going to be strong. I think it's just more of a healthy correction. This is not something that I'm saying, okay, feeders are high, it's time for them to go down. If corn would continue to find some legs here and run even harder yet, maybe they'll take a further correction. But I don't think it's going to be a good night type of correction. So I think it's just going to be a little bit. Live cattle side, we're expecting some decent cash. There's a really good feel to the market. I think the South sold out a little bit early last week with their 170 and 71 early in the week, just to find out later in the week how tight the packers actually still are in needing cattle as the North capitalized and got the cash up to 183. So the North is going to keep that I want higher feel to the market. There's still some expectations of getting a couple higher in the North yet from those numbers. And in the South as well. I think the South did try to stand up and say, hey, we'd like maybe a little bit of a floor at 173 this time, try to get a couple higher. And then you see some of the regionals dip down into Kansas, some of the northern regionals, and pay some higher prices, some 176. And then there was a 180 trade on some good cattle there too. So the need for cattle is they're short. They're close to the knife. They need some cattle. So I think we can use that as our leverage to try to keep this market higher and ask for a little bit more.
And of course, we've seen a flip in terms of margins now because Packers moving into the red. What are the feedlot closeouts looking like? How good are they?
We just started seeing some positive closeouts, and that would have probably been about the end of March when we turned that to where we saw some positive closeouts. The corn basis ate up a lot, any chance for the profits there over the winter time frame, and now we finally got. Once we got north of 165, I think we started to see some positive closeouts, and cost of gains are still high, but there's some chances. I haven't seen a lot of the closeouts on the 180, mid 180s coming in that hard yet, but it was time. Like I said, the couple of years that they went through of negative, profits, losses, I guess, in the feed yards and record packer margins, we've just shifted that uh, in extreme fashion here in pretty fast. And I think that that's warranted. If we were going to keep depressing this cow herd and depressing the beef numbers as record profits in the packing industry were happening, well, that pendulum swings too far, and it's time for it to swing back the other way. If we want to rebuild this cow herd and we want to have a sustainable beef industry, then these profits are going to have to roll into the beef producer for a little bit longer than just a 2-month window where we got some profits and now it's time to shift it back, feed them just a little bit of crumbs. I think it's a bigger issue than that the profits are going to have to stay for a while in the beef industry to keep us to want to grow that cow herd. And as we talk about the drought side, not seeing abundance of moisture in some of the northern cow calf country yet. So we'll see if the heifer retention starts to happen or not.
Hard to believe packers aren't making money right now with choice boxes still above $305.
Yeah, and that demand is still there.
Yeah.
I mean, consumers are still wanting the high quality beef, and that I think has room to move higher yet. So I don't think it's the packer can't move the beef, so they're a little bit worried about it. So I think there's room for that to go higher if they do get in need. I think those prices will move higher on the choice, and I think the consumer is ready to pay for it as of now. I know I keep hearing, "Oh, this beef's too high; they're going to have to switch," and we're still seeing that the demand is there for it. We're in some outside market news that's a little bit shaky now, so that could be a shift. That's the biggest fear that we have over the demand that we've had is what's going to happen if the economy does take a little bit harder of a hit. We'll see if that rubber meets the road. We've talked about it for the last couple of years. I think the word recession just pops up in a routine basis here, and but we're still doing okay as of now, and we'll have to monitor it going forward.
Yeah, at least we got a discussion, or at least a agreement, I should say. The House voted positively on the debt ceiling, and so hopefully that deal will go through the Senate, and we can get at least that part of the outside market influence behind us. Hog market, what do you think there? Two big up days. Cash trade was up big yesterday. I thought maybe it was end of the month short covering activity by these funds who are so short, but is it that, or is this over here, just a little short-term correction, or what?
Wish I had some really good, clear advice for you on that. We've had such an exhausting correction, and the funds sold the market down hard and hard. And I think anybody that was hanging on longs, there was some last-ditch efforts to try to hang on longs. So there was some serious margin calls and some of the from the long side of the market. So there was a lot of unwinding of any kind of longs, and it finally just reached that exhaustion point where it was time to give up. And then you have real similar news. The cash is good. It's even higher than the board positive basis. The weights are below a year ago. So some of those stories have been there all the way down. We finally found that spot, and then the next day, boom, your limit up, followed by another $3 up day, just out of the blue. And the news is still pretty similar to the same. Other than you do hear the government's going to buy some pork, as some of those prices got low. So that was really the only thing that maybe would have crept out before, that limit up day, that somebody has that knowledge before, the rest of the market does. Maybe that's just the one thing that could turn the market around, but it needed a rally. And then that's how just the wild beast that the hogs are, is all of a sudden they're limit up and then $3 higher the next day. And if you were thinking about trying to buy it on a recovery, that just left. There was probably a big group waiting, trying to find out when that market bottomed so they could be long, and then it just leaves that fast, so it makes it that hard. So now triple digits lower again today. Good question on where they're going to go.
Yeah, it looked like a V bottom yesterday on the charts for sure. So
yep, left a gap yesterday, so I suppose they'll probably gun for that today to try to see if over the next couple of days if they can close that gap. Otherwise, we can start to do some measurements from those gaps.
Okay, we'll talk to you soon. Thanks so much for joining us, Scott Varilek with Kooima Varilek. That's Markets Now.